I want to quickly talk to you about DIY credit repair. The thing is, when you are trying to repair your credit, you have a lot of possibilities, right? You can actually hire a credit repair company, right? You can also have a credit repair app. You have a lot of apps nowadays that really get the job done real fast, or you can try to do things yourself. As a matter of fact, you can also go to a nonprofit organization. Okay, but in today's conversation, I want to talk to you about how to do it yourself. Okay, how to DIY your credit repair, let's say, process. Because if you are, let's say, if your credit score is around 500 or even below, and you are trying to really beef up your credit score, you might have to really do certain things yourself. Okay, it's all about being proactive. It's all about really taking things in your own hands. So here are the hard facts I want you to really pay attention to. The thing is that when you think about DIY credit repair, you got to really think about a very cost-effective way to fix your credit score, because credit repair could actually cost you hundreds of dollars to even thousands of dollars, depending on how quote unquote bad your credit score was in the first place. So this is something that you really have to keep in mind. Okay, so it could be a costly process. So in today's conversation, I want to really share with you when it comes to a DIY credit repair. I want to really share with you tried and true steps to actually repair your credit real fast. And again, I want to insist on the fact that you want to do things proactively. Do not wait for things to actually get worse before you start taking actions. Okay, it's all about taking actions real fast. The first thing you want to do here is to get copies of your credit reports. If you're thinking about DIYing your credit repair process, you have to know exactly what's really happening with your credit report. So what I want you to really do is to contact the three credit bureaus: Equifax, Experian, and TransUnion, and really have a conversation. You want to start a conversation with them, all right? So, the bottom line of this conversation is for you to have a clear idea about what's happening with your data. So now keep in mind that if you want to have your credit report, you need to provide your full name, phone number, your address and zip, your date of birth, and your social. Okay. So once you actually get your credit reports from all those three bureaus, you want to review your credit report for the following, like accounts, personal information, and also credit inquiries. Who's looking at your credit in the first place? You want to have a clear idea about that. That's the first thing you want to do. Get copies of your credit reports. Second, you want to review every credit report from all the three bureaus, okay? For payment history and on-time payments, average account age, account types, previous credit inquiries, and also your credit utilization. Your CUR is important also. If you're thinking about a DIY credit repair process, you also want to really start thinking about disputing inaccuracies with the credit bureau. See, the whole thing is that nobody's perfect, right? The bureaus are not perfect. They're let's say products of human intelligence. So something can happen here, okay? And it's one of those things where if you spot any inaccuracies, any mistakes on your credit reports, you want to really act fast. It's all about acting as fast as possible. And you have the possibility to dispute inaccuracies with the credit bureaus either online, via mail, or via phone. Okay. The cool thing is every credit bureau, TransUnion, Equifax, and Experian has on its website an online form that you can really fill. And once you fill out that form, you are able to start the process real fast. Now, if for any reason you're not a quote unquote an online person and you want to really mail a regular letter to the bureaus, you can do so. So for Equifax, the address is PO Box 740256, Atlanta, Georgia 30348. I'm going to put this on the screen so it's pretty clear. So for Equifax, it's called the address is called Equifax Information Services LLC, PO Box 740256, Atlanta, Georgia 30348. For Experian, you want to actually download a dispute form and mail it to. You want to fill it out, of course, and you want to mail it. You want to mail it out to Experian, PO Box 4500, Allen, Texas 75013. So again, I'm going to put this on the screen. And for TransUnion, you have the address TransUnion Consumer Solutions, P.O. Box 2000, Chester, Pennsylvania 19016. So you have a clear idea what you really do to contact the three bureaus. Let me give you their phone numbers too. For Equifax, it's 1-888-378-4329. For Experian, it's 1-888-397-3742. And for TransUnion, it's 1-800-916-8800. And you also want to make payments on late accounts. That's the fourth thing you want to do. You want to keep making payments on the late account to really straighten things out real fast as well. So in addition to making payments on late accounts, you also want to tackle your debts. Here, I'm speaking about your current debt, okay? Your current debt, that means what? It means that you have to really pay attention to two important metrics called CUR and DTI. So the thing is, if you're thinking about an effective DIY credit repair process, you want to do things yourself, you want to put things in your own hands, you got to really understand that debt is going to be quintessential to your credit score. As a matter of fact, the amount of debt you have actually accounts for 30 to 35% of your credit score, which is really huge. So if your goal is to really bring up your credit score, you want to bring down your debt, okay? So CUR stands for credit utilization ratio, and DTI stands for debt to income ratio. Those two metrics quintessentially play an important role when it comes to your credit score, okay? And you want to really, so when I speak about CUR and DTI, when I speak about CUR, for instance, I'm speaking about your revolving lines of credit. Here I'm speaking about your credit cards, and I'm speaking about your personal lines of credit. So whatever you have out there where you're having a revolving line of credit, you want to really reduce the CUR and preferably below 30%, okay? That's going to help you big time. So keeping your credit utilization under 30% can really help boost your credit score big time. You also want to set up autopay. If you are trying to really have a DIY credit repair process, don't leave things to chance, okay? We all have busy lives. Life is complicated sometimes, and we're busy. We have to take care of the kids. You got to go to school. You have a job. You have to socialize. There are a lot of things that you have to think about. And it could be possible for you to forget to pay your bills on time. That's why setting up autopay will help you big time in terms of avoiding those quote unquote those temporary shenanigans that will come if you, let's say, if you're really sucked into life. Okay, so one thing for sure, payment history accounts for 35% of your FICO score. Think about that, 35%. And then you have your outstanding debt accounting for 30%. You add those two, you are at 65%. That's a lot of percentages. Well, that's a lot of percentage when it comes to your FICO score. Okay, so the point I'm trying to really get at here is that you want to really automatically set things up so that you are really you are on time and you pay your bills like appropriately. If you're trying to really have an effective DIY credit repair process, you want to really maintain a low credit utilization rate. It's one of those things where a little earlier I mentioned 30%. 30% is what experts really agree on. But hey, listen, the lower the better. When it comes to DTI and CUR, the lower the better. If you can go to 20%, do it. If you can maintain your CUR around 15%, do it. If you can maintain your CUR around 0%, around 5%, do it, right? It's all about reducing your CUR as low. It's all about bringing it down as much as possible, and actually hoping that the quote unquote forces of FICO will help you beef up your score up. So you want to maintain a low credit utilization ratio. And when I say credit utilization ratio, I'm speaking about your revolving lines of credit, because when it comes to your installment loan accounts, we are speaking about DTI, okay, debt to income ratio overall. Also, if you are trying to go in your credit repair process the DIY route, you want to open a repair, like a credit repair credit card. So you have a lot of credit repair, let's say credit cards out there they really do a good job when it comes to helping you in the credit repair process. So you have a secure credit card, and you also have a you have a credit builder cards. So there are some cards that really are geared towards really those folks who have no credit, or who have spotty credits, right? It's all about seeing what really works for you and what doesn't work for you. So think about that. If you're trying to really increase your score, instead of going to the top notch credit cards, go for the ones that are really easy to get, the low hanging fruits, right? Sometimes it really helps to be strategic about your credit repair process if you are trying to get results real fast. Now, if you go the normal way, if you listen to what the pundits are saying, you might actually find it harder to get a credit card because most credit cards want you to have a decent let's say credit score, like starting at 600, and if you are somewhere around 400, you could be really you can find things complicated for you. If you are trying to do a DIY credit repair process, I want you to really understand that this is a long-term goal. This is a long-term process. This is a long-term routine. It is a routine, okay? So you want to keep the process going. You want to keep the progress also going. The process and the progress. The process in the sense that you want to put in place a series of actions, a series of decisions, a series of initiatives that will help you be in a good mental mode when it comes to your finances. And the progress, you got to keep the progress going in the sense that you want to make a budget. You want to monitor your credit reports. Going back to what I said to you a little earlier, that you have to monitor your credit reports. I mean, monitoring your credit reports is not something you do like because you're just trying to fix your credit. No, it's one of those things where you got to say, listen, I've got my job, I've got my family, I've got my house, I got my financial goals, I got this, I got that. The same way I have to have a goal when it comes to maintaining or even improving my FICO score. So it takes strategy, it takes a method, it takes an approach. Okay. You also want to avoid applying for new credit cards that you don't need. It's one of those things where we are so bombarded with so many offers, so many credit card offers, cashback rewards, travel rewards, miles rewards, and what have you. It could be really tempting to really apply for a credit card just for the sake of applying. But don't do that, because anytime you apply for a credit card, they'll do a hard pull on your credit score, and this could really lower your credit score. So if they do a hard pull on your credit report, this can really bring down your credit score by 5 or 10 points. Now, you could be saying, listen, this is not a lot, but if you apply for multiple credit cards, you can see your credit score going down by as much as 50%. I mean, 50, not 50%, 50 points or 75 points. Okay, so this is consequential. You want to seek professional credit repair advice if you have the budget for it. Okay, it's one of those things. And you also want to avoid applying for new credit. I'm speaking here about new credits in terms of loans, new credits in terms of personal lines of credit, new credits in terms of credit cards, new credits in terms of credit builder loans, new credits in terms of joint loans. It's all about making sure that you are keeping your credit history as spotless as possible. Don't really apply just for the sake of applying. You want to apply when you have a need, right? Family need, you need cash or something. You're just trying to really fix something in your family. Then you can apply, but be a little extra careful here. If you're thinking about your DIY credit repair process, you want to really keep unused credit accounts open, right? It's one of those things where if you are trying to really increase your credit score, your credit history also plays an important role. Like 10 to 15% of your credit score actually has to do with your credit history. So the longer the credit accounts that you have on your credit reports, the better it is. And again, this approach is actually consistent across Experian, across Equifax, and across TransUnion. Okay, so you don't have to say, well, it's good for one and one bureau and not good for the other. It's good for all three of them. So you want to keep unused credit accounts open. I mean, unless they're charging you, if they're charging you an annual fee, for instance, then you can close them. Okay, but if they're not charging you anything, just keep them there. I mean, you don't have to use the card. It's all about making sure that you don't have to use the card, but at least see how you can really structure your life to make sure you get the best. You also want to consider a credit builder loan. A credit builder loan can help you out, really increase your credit score. So if you're thinking about DIY credit repair, you want to think about loans that can really help you. And credit repair loans actually is good in the sense that it's actually a method for you to save money while also build your credit. So a credit builder loan is pretty simple in the sense that they don't give you the money, right? But you make the payments. You make the payments every month, but they don't give you the money. The bank doesn't give you the money. The credit union doesn't give you the money. Once you're done paying the loan, that's when they give you the money. So this is a reverse loan process. So it is a credit builder loan, okay? And this is actually a good way to save money for something important. Let's see. And you also want to understand that you might actually think about getting credit counseling. So, of course, I'm speaking about DIY credit repair, but sometimes you might be thinking about going to credit counseling. Credit counseling is different from credit repair in the sense that credit counseling is usually a nonprofit and you are involved. That's why the DIY part is still there. You are involved. They don't just take care of things for you. They are involving you from head to toe, and you'll be helping the whole process. So let me give you a few best practices here. When you think about effective DIY credit repair, it's important to understand that if you are trying to go the credit repair route, you want to really also think about consolidating your debt, right? It's all about understanding that debt consolidation can help you in terms of because see, debt consolidation will keep your DTI and CUR intact, but it will really help you sort of have a method of instead of talking to 10,000, instead of talking to 10 different lenders, to only talk to one. Okay, that helps a lot in terms of budgeting. That helps a lot in terms of organization, and it also helps a lot in terms of going about the whole process in a more effective way. So you want to consolidate your debt. You want to become an authorized user. An authorized user can really help you also. You can really sort of piggyback on the positive credit history of a friend, a family member, or a colleague. Okay, and that's kind of cool because if you become an authorized user, what happens here is that basically their credit card issuer will give you a card linked to their account without conducting a hard inquiry on your credit reports. So that's really good. So what happens here is that as an authorized user, you're not legally responsible for paying the bills on the card, but the account can appear on your credit report. This means that the payment history, account age, and credit utilization ratio may be factored into your credit score. So this is kind of cool. But again, this is one of those things where you want to make sure the friend or family member is actually a pretty responsible in the way he or she uses credit. Okay. And also, you want to get help when needed in terms of going to government agencies. Okay, that's kind of similar to credit counseling, but it's a little different in the sense that you have some government agencies that can really help you out. And you also want to avoid credit repair scams, avoid companies that require payment upfront. Be wary of companies that, let's say, promise a specific credit score. Like they tell you, listen, I'll help you reach 750, for instance, okay? No legitimate credit repair company can guarantee a specific score increase because credit scores are determined by multiple factors and can change over time. Be careful of companies that insist on secrecy and never dispute accurate information on your credit report. So that's really important. So in the extras here, it's important to understand that basically a credit repair process is a long-term process. It takes time. It ain't happening in 30 days. It ain't happening in 60 days. It takes time, but you got to really trust the process and you got to do the right thing all the time. So here's a quote out into this conversation. I spoke to you about an effective DIY credit repair process. I'll give you the hard facts, the best practices, the extras, and now the coda. Thank you so much. God bless you. I will see you next time. Until then, remember, stay marvelous.